Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. Here are a few moments that I would like to share with you today, and not all of them have the economical background. This relates directly to the gold. So first of all, I would like to warn you about today Nancy Pelosi arrival to Taiwan. So you probably heard about this. It's expected around 2:30 p.m. by the Central European time. So of course it might be delayed and some shifts in the timing, but in general it will be around 2-3 p.m. In the Central European time. This is really big game, guys, and stakes are really high, and it might happen that they are not bluffing actually, because Trump have warned in the Twitter that situation around China and Taiwan might be deteriorating and become worse. And the stakes really high, because if China step back, it will hurt it's made the foreign policy where he treat the Taiwan as a part of its own territory, and they always talk about the single China. So there is no separate territories of Taiwan. This is not independent territory, and it can't step back, because this is the policy that China is following within the century probably. If United States step back, so it also will be the hurting of the hegemony on the global arena, and it's also will be not very good. So what will happen, I don't know, but the tougher conflict will be, it will support the dollar, but it even more support the gold, because despite the dollar rising on any geopolitical turmoil, gold usually rising more. So it also might be extreme volatility today, and gold could show some spikes and so on. So I just would like to warn you. But that's what about the tactical performance, and what about the current situation. Returning back to our fundamental analysis that we discussed in the recent report, you could see currently we got the confirmation of our view is that indeed Fed and Treasury intends to start printing money again. Let's take a look what we have in an article in the Bloomberg today. Treasury lifts quarterly borrowing to the $500 billion mostly. It is interesting that previously they were intending to borrow 2 times less, stake 182 billions, currently at 444 billion. So it's just in the quarter, in the July through the September. So here has become clear how they intend to finance the quantitative tightening. So they will be borrowing and using the money just to make the quantitative tightening, but in a less amount, because the tightening stands currently until August for 45 billion per month approximately, and then it should be increased to the 96 billion. So as I said, this is the major thing that we need to know, and that confirms our idea. So in the current situation, we should be ready that inflation will keep going higher. It's no decrease in inflation will be. Yes, markets could stabilize, treasury market, stock market, Bitcoin market, but inflation will keep going higher. So another interesting tricky moment here is who will buy these new issues, because demand for the treasuries currently stands in the lowest level, so nobody buys it. And if treasury starts spending its own cash deposit in the Fed, that I already have shown you, recall this chart I'm often recent time shows you, now they have 600 billions. So actually they have enough cash to buy all the issue in 3 months to finance this issuing of the new debt. And this will be really interesting what will happen with the deposit, whether it starts decreasing or not. If it starts decreasing, it means that nobody buys the treasuries and they spend the cash to finance the new issues. So they're issuing the debt, and by itself they are buying it. So This is also important, but we will take a look at it a bit later. Currently, it's more important with this new program for the Fed and from the Treasury that just confirms our view. They are defeated by inflation. They will not make any tightening policy, and they will start printing money again. It means that collapse will happen, but a bit later. And for the gold, it's very positive news, and it means that reversal on the gold market could start even earlier than we suggested. Now, speaking on the technical picture, you could see that the market is calling very close to the confidence area. And here I think that we just need to sit on the hands and wait whether the market will show the bounce down, maybe on some Taiwan turmoil or something of that sort, or not. If it will happen and shows the pullback here, that's great. We will consider the possible taking the position around 1740. As we suggest, it's a confidence area with the possible upward continuation to the 18 or 6 to the XOP. If it will not happen, well, it will not happen. But they suggest that here's acceleration might follow only if some conflict starts in the Chinese Sea, in the Taiwan Gulf, so around the Taiwan. So if everything will be normal, this gold market could show some minor pullback here. On a technical background, on the hourly chart, here as you can see minor bearish performance. So butterfly actually is kind of the free drive sell was forming here. So wedge patch, and that theoretically give the hints that probably some pullback will happen if, of course, no geopolitical issues starts here. So some divergence you also could see here on the chart. That being said, at this moment, right on the top, I do not see big sense for taking the position, only if you would like to make the bet on some escalation conflict in China and the United States around the Taiwan. So in this case, you could use, for instance, step buy order with an attempt to make the bet on the possible upward breakout. So please stop buying order somewhere around this top. As market starts acceleration high, you will step in by the stop buying order here. If you do not want to take part in all this stuff, just do nothing by far. Let's wait for a pullback and then make a decision. If the pullback happens, we'll make the decision what to do next around the major support areas.